All right, guys, I just want to show something that I've been working on for a long time. I basically called this Dow drop before I even knew about the coronavirus. On January 9th, I was showing you these guys, and I did this on multiple videos, but this is the video that is really where I call it. I was showing someone this the other day. If this doesn't kind of get you a little freaked out, if I go to the weekly here and I look at the Dow Jones, this is January of 1999, okay? This was the dot-com bubble, when the dot-com bubble burst. And we lost about 32% of the Dow right here, okay? Then we reset. It was 2003, 2001, right, area, and we began to grow our economy again. And things started to balance up. And we had the manipulating, we had quantitative easing, and we had the Fed interest rates, and we raised up. And here is the worst financial collapse since the Depression, right? Technically, right? The '08 collapse. Boom. The Dow lost 56% of its value, okay? So here is the dot-com bubble. Here's the '08 crash. Here we are now. If that, and everyone said Bitcoin's going parabolic. When the chart of Bitcoin was like this, every analysis on CNBC or MSNBC or Bloomberg was saying, this is unrealistic, this is a bubble, you can't have this anymore. And now look what we have in the US stock market. I mean, if you don't see a vertical parabolic move here, it's insane. So you can just see what quantitative easing is doing right here. I'm breaking it down for you right here, crystal clear. So because a lot of people think I'm reading conspiracy books and I'm just getting deep into stuff. No, like I'm looking at the facts. I'm actually spending a lot of time analyzing what's actually happening. Here's another day, January 18th, where I'm showing you the Dow yet again. Did something similar. This is getting to be a vertical line here with the Dow Jones. So again, I don't know if I showed you guys this on my other streams, but what I wanted to prove to everybody and to show them was if I go like to the weekly here, I can show you this is the dot-com bubble right here in 2000s. This was the '08 crash, and here we are, just like, you know. So it took, this is from 1999. This was 8 years here, right? And now you have from 09, 2010 to 20. This is 10 years. So we did this in 10 years. We did this in our next 10 years. And this all just comes from quantitative easing and printing money. Yeah, so. See, it's even saying the stock market races to uncharted territory. Like, it's never been this high. It's kind of scary for me to think about because it's just a bit absurd. Here I am one more time, another day, January 27th, showing you the Dow again. All right, let's check on the Dow. Is it struggling? What's going on? Down 433. You can see we hit a low of 28435. We never should have went to 29.3. I mean, it's like, again, I don't know if I showed people this, but I've been watching this a lot lately. I have to put this on the weekly to be able to look at it properly. But I put these lines in here, and what I wanted to show you was this was the dot-com bubble of 2000. Boom. This was the '08 crash. Boom. We are now here this high. I mean, 2000 to 2008, we could only go that high. How come from 2008 to 2020, we went like that? And I'll tell you why. And look at the line that the stock market all the way until this then. We're at the end of our line, people. We're getting to that point of no return. Let's look at it on a fib. Like, let's pull a fib retracement on the Dow weekly. This is where I tell you where it's going to go on January 27th. So here we can see a clean bottom. Approaching 2 months ago. Draw a fib from this bottom. We're just going to see where we could go on a likely retracement. Normally, stocks retrace what's called 61%, 61.8% actually. And that's why they use the 61.8% Fibonacci level as a nice, what's called golden pocket. See this pocket here? So that could mean that the Dow could return back. And this would be completely healthy to here, to 618, which putting the Dow at 15,000, guys. It's almost cutting it in half. That was worse than these marks here, right? Here's the dot-com bubble. Dow at 10,048. It's low at 7,000, so that's 30% loss. Here is the '08 crisis, right? Dow at 14,000, down to a low at 6,000. That was a 50% loss. So we actually, if we look at it, and I think it could get worse. I think we'll go further down to $10,000. You're going to see blood in the streets. People are going to be screaming and yelling. Gold is going to go up. $2, $3, $4, $5,000 an ounce if possible.